Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Dr. Kim, thank you for making time today.
Good afternoon, Devin.
Well, the BOK, as we just heard, decided to leave interest rates where they are, having made a big cut last month. What does that decision tell us?
Bank of Korea has decided to hold the base rate at 0.75% today. It means that after going for an unexpected a half percentage big cut in the last month, central bank will watch the markets respond to stimulation measures. In last month, along with the big rate cut, Bank of Korea also expanded liquidity relief measures to prevent possible credit crunch in financial market by purchasing unlimited RPs.
Right. Well, it does look like from the Bank of Korea, the comments today that Korea's economic growth this year might fall well short of what we were looking at just a matter of weeks ago. We're talking between 0 and 1%. What's your outlook on Korea's GDP?
Bank of Korea's most recent economic growth forecast for this year was 2.1%, but it doesn't look that number reflects current declining economy. So today, the chairman of central bank said it would be tough to achieve even 1% level economic growth. I pretty basically agree with him. And he also added, under normal assumptions on the developments of the coronavirus pandemic, this year's growth rate would be above 0%. So that means he admits the possibility of 0% economic growth rate for this year.
And of course, analysts elsewhere have even predicted a minus growth. But
right.
Stocks on Wall Street were up overnight on hopes that the pandemic is peaking or that it'll peak soon. What's the story in the global markets?
On Wednesday's market, S&P 500, which is representative U.S. market index, gained over 3.4% in a single day. So that was a pretty big up move after Monday's over 7% increase. Bernie Sanders, who is U.S. Democratic Party's presidential candidate, has ended his campaign, and it makes actually a positive impact on the market because he pulled Democratic Party to the left side. And also, U.S. government's aggressive cash out program to citizens and corporations made a positive impact on U.S. stock market. European markets were pretty mixed between positive and negative over France, UK, and Germany because of something conflicts over Eurozone economic salvage packages.
Interesting that the Sanders campaign would have an effect like that. But Korean stocks today are up as well, at least in part on cue from Wall Street. What happened today in the local markets?
Korean markets were positive today. Kospi gained over 1.6% today, and Kosdaq also had a 1.4% increase. I think there comes a rising hope that coronavirus is approaching its peak in Korea because number of newly confirmed infected is declining slowly. So basically, this hope is slowly becoming a positive factor to Korean stock market.
Indeed. Well, in the bigger picture, the credit ratings agency Moodys has decided to keep its outlook for Korea at stable, but it does say that rating depends on the ability of Korea's public finances to handle the costs of a rapidly aging society. Always a concern. What do you make of that?
After the outbreak of coronavirus, there has been a big concern that major rating companies like Moodys can downgrade Korea's sovereign credit rating. But Moodys maintained yesterday Korea's sovereign rating at stable or AA too in its regular updates. This is very much great rating because above Korea, there are only 6 countries in Moody's rating. They say that COVID-19 affects Korea's major industries, but these effects on country-level economy is kind of limited. They, however, gave a warning against worsening government debt, which could be an important issue after financing upcoming emergency basic income.
Right, and of course some credit rating agencies are looking at downgrades for specific companies, but luckily not the country as a whole. All right, Professor Kim,
right.
Thanks so much for sharing your insights today. We appreciate it.
Thank you very much, Devin.